And so Vikram, what is it? So to your mind, you, because people don't have Nifty futures in the portfolio, maybe institutions like you do as a hedge, but largely people don't. So my question to you is, if the market is going to see this 12%, 15% earnings growth and therefore consolidates, where is it that the winners will emerge from? Is it the underperforming banking space, which has just started performing now? Are there other themes that you reckon could come to the fore?
Sure. So we also long only player. We don't hedge our portfolio.
Achha, you don't, okay.
So we have only one fund which runs on absolute basis, but there we either long equity or long debt, short-term debt. So we don't do futures because it's very expensive from tax perspective for the client. And also, that fund managers typically is short at the bottom of the market because we are all psyche-driven people, right? So we don't catch the right things always, right? So I think it's better to stay away from the futures.
Yeah, that's
and
great.
you know how futures are happening in India. The option market is really getting ballistic and crazy. Coming back to I think great question. Sector-wise, I think there's going to be a sector rotation. It started. I think it will go deeper. My own view is that you'll see the stock like private banks, private NBFCs, high quality, will start looking better than earlier. More and more rural side spending. We've seen MSP. We are going to see some more measures. You'll see some turnaround in rural economy for sure going forward. So sectors which are around agri inputs, two-wheelers, tractors. I'm not getting into but I think around agri rural will do well. I believe the housing for all is one theme which is pending by the government, which I think is going to be very important in next run. So low-cost housing is one area where you play through cement or utilities or peripherals of housing. So I think this is what I think the space which is likely to do well going forward. Of course, some space we anyway liked always, but there are some more going to be addition. Also sector like I can say consumption will start looking a little better than earlier. So all these sectors, as you rightly said, are not performed well in last two years. I think they will start doing better than the other sector. I'm not very concerned on PSU, but I believe that PSU has seen the decent run. I believe PSU will people will start looking at PSU versus private because the valuation gap has narrowed. You look at any financial institution in PSU versus say a private bank, top private bank, the valuations are same. So people will look back at the risk management and the change in the structure, also coalition, strong opposition. So I think PSU, in my view, will maybe a market performer, neutral, to a little bit of underperformer. Metals we don't like for a long time. IT, in my view, will continue to drag down. A very expensive Capex stocks. We believe that there's a limited upside and there can be a more downside if there is a surprise on negative side on any delay of the project or any issue in the margin. So I believe despite order books are looking very crazy, I personally believe that you have to be very careful in choosing Capex stock. It doesn't mean that we don't like Capex stock. We own Capex stock, but having said that, you're very, very, very careful about what you're buying, what kind of margin of safety you are having in terms of EBITDA margins and the execution cycle. Are you at the midway of the execution cycle? Or are you a subcontractor? So you're actually going to detail of. That's why I'm saying now it's a time where you have to do a lot of work. It's not a hunky-dory. It's not going to be anyone's game who can just say, okay, I can make 40-50% in a year. I think it's going to be very different market than what we have seen last 2 years.
Okay. Vikram, one question. We have the SBI interview coming up, so today we'll have to cut short after this. But I have one more question to you. Some of the underperformers of the recent past, wherein because the export-oriented markets were not quite strong over the last 2 years, chemicals, specialty chemicals, for example, and selected the pockets. IT over the last 6 months because of the US banking crisis, etc. They've not gone anywhere. On the valuation front, maybe IT is still expensive, but chemicals certainly aren't. Are those pockets that you might look at because they are giving you valuation? And I've seen 3 or 4 brokerage conferences in the recent past focus on chemicals and coming out with notes saying that the tide might be turning.
So I think chemicals and agro inputs as a basket looking quite better than earlier. Having said that, I'll be very wary of buying export-driven chemicals because I still believe the slowdown in the world is not gone anywhere. India's circumstances have changed a little bit, but globally things are still tough and bad. I don't think so that chemical export companies will do well. There may be a 1-2 company because some plant shutdown can do well, but as a basket, I'm not very bullish on chemical. But companies which are looking at inward kind of chemical supply or they have the long-term contracts with their clients, I think they will do well. They have actually kind of seen a decent consolidation. I believe there are pockets of the few of them are looking quite good, but overall as a sector, we are not very bullish on chemical as such.
Okay, and maybe I missed a little bit on tech, Vikram, but I'm just love to understand because now you have a very significant global perspective. Is the pain ailing, or is the pain coming to an end, or is it difficult to call that right now?
I have three problems with the tech right. Unfortunately, one is clearly the world is slowing down. I think even you have US doing well, okay, but even you open the Nasdaq. I'm just trying to go a little away from the topic. Only 20% stocks are performing in Nasdaq all time high. Broadly, US as a overall economy is not doing as well as what market thinks. Other part of the world, Europe, Canada, Japan, UK is in a severe slowdown. I can say some are in recession. I don't see that's going to change because that's a demographic and structural point in that scenario. And also you have AI on the top of it, right? So I think on the top of that, I'm not expecting on such a high base tech company can deliver. That can be a 10, 15% run here and there. But I don't believe that's going to, really change the needle too much. Having said that, there are a couple of companies in tech we believe where there's a change in management, top level management. There's a capital allocation focused by the few of the companies. I think that within the basket, couple of them can do well. But broadly, tech, in my view, will remain underperformer. We had discussed last year, a year and a half back. Every time we remain on the same point that tech is going to be in a trouble for some time because there are a lot of things that are going to change. In tech, it's not going to be very simple business model as it was early.